Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
What you can see in this chart is that actual EUI. So here's that drop, that initial drop that we drew that was a rally, in this case, marked A. You can see the two little waves of upside. And then here was that move marked B. You can see that boot there too. This is the same chart that we looked at earlier of this EUI. And that created that high probability odds of a reversal pattern forming off of that zone because of that equal move, and because that equal move took place with very comparable momentum moves. Another example of this takes place on a 1-minute chart of the YUK. Now the YUK is the US dollar Japanese yen currency pair. And what we have here is a lot of back and forth momentum moves. I wanted to show you a 1-minute in addition to showing you the daily chart because it's very important to realize that this type of momentum shift and how to read momentum and pace changes in a security doesn't have to apply just to one particular time frame. It applies no matter what time frame you're trading, no matter what security you're trading. You're going to see similar types of price development time and time again. Even in this particular chart, we had a rally here, a two-leg pullback that breaks higher here. Well, this is very similar to this two-leg breakdown that we had here. So we have these momentum shifts. In this case, it's a daily chart of the USD CAD pair, and in this case, it's a short trigger. But on that 1-minute chart of the YUK, we're looking at it as a buy trigger. We didn't have quite as strong of a rally as we did a breakdown, but it still leads to that same type of action. What we look at this YUK is we had this longer trading range. And when we were looking at our original pace or momentum template, we were looking at how when pace shifted within a trading range, and the template looked like this, where we had that pace shift here on that last upside move. When pace shifts, it gives you an idea of which direction a trading range is going to break. You can see that early on in this range, there's not really a lot of indication of that. All of these back and forth moves, they're pretty average, comparable to each other. There's nothing that is weaker or to a lesser degree than a previous move. But when we get down to this segment here of that two-wave action, now the momentum has shifted. We have a slower pullback, a little bit of a bounce, and then a congestion move. So this gives you that heads up that this particular trading range has a higher probability of breaking higher than it did breaking lower. And it's often just a matter of a couple of ticks sometimes, because if we look at this here, if this had not created a slightly lower low here, it could have created a momentum shift going this way, where we would have had a slower upside trend channel, hence favoring more of a breakdown pattern. But because it had that slightly lower low, that created that two-wave strategy where now the momentum has shifted on that second drop as compared to the first drop, and it led to that buy trigger marked here as A. We had a very strong upside momentum on that particular breakout. Comes into about 50% of this gap and overall market move on the downside here, which is a price resistance level. And then we have another congestion forming. And once again, you look at the momentum within that range itself, you can see the momentum shifted. So you have slower downside move, which creates a higher probability of an upside breakout. And it began here. It actually started out fairly decent. You had a strong initial breakout. So you would have had an initial target on this between 97, 97.05. Basically an equal move compared to A. However, when this continued to break, we had a shift in momentum. We had a little bit more of a correction here than we saw in A. So in A, it just kind of paused, but in B here, we had a little bit more of a correction. And that helps shift that overall trend. Let me get a different tool so we can see this a little better. It's not very fat, but hopefully you can still see it. So now we have the momentum starting to shift, where in A, we had this strong upside move. Now, when we transect that move, we have a slower overall breakout move. So that tells us that we're not as likely to hit that target level that we had originally set. Even though we were looking for about 97 to begin with, it's going to have a more difficult time getting into that because of that shift in momentum and that shift in pace once it already broke out. Initially, looked great. It was well on its way. Had the same momentum on the breakout as it had on A. But it shifts. This can help you not only have a better idea of the fact that it's not going to hit your initial target level, it can also help you develop strategies for getting out of that pattern or getting out of that position instead of waiting for a stop to hit, which might have been most likely under this level here, under 96.70 or so. A lot of times people will move their stops to break even. I don't suggest doing that because a breakout level tends to be a price support level, so a lot of times come into a price support zone and then turn back around. So I don't advise ever moving your stop to a break-even level unless it happens to be on the opposite side of a stronger support or resistance level already. We do have a shift in momentum within this breakout itself that also suggests a reversal. And that's that little area here that would have been marked C on our earlier templates. If I go back and look at that, you can see right here that same type of thing. So now we have that shift in momentum, slower move on the upside, and that helps create that breakdown pattern. So we had that same thing develop on that 1 minute now of the YUK, oops, one too far here, which triggers a shorter reversal pattern. It's a little bit higher risk of a pattern or a strategy on this particular time frame, this particular security, because it's a really small move, and we don't have any idea of what's going on in the larger trend just looking at this. This could be the trigger of a larger bear flag, or it could be something where we have a stronger support level and this just leads to a little bit larger of a correction and a continuation higher. You always have to look at larger time frames to give you a better idea of what's going on those time frames and what other building blocks are coming into play. What is the momentum or pace forming on those larger time frames? How's that going to impact your moves on the smaller time frame? In and of itself, though, it's a great scalp setup, and it has the potential of leading to a longer breakdown as well.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.